Hello everyone, my name is Vikas Shukla, my name over here, and I am an advisor at moonshotjunior.com. It's a product based learning platform. If you have any kid with 10 to 17-year-old range, you may want to check it out. In today's video, I'm going to cover the LRN Stride K12.com, all three pointing to the same company. And let's look at its stock today. Uh, I'm going to primarily focus on its results over the last 4 years and especially the last 4 quarters. And it's interesting because if you look at these figures of the last 4 years, they were increasing very incrementally from $808 million and is missing here to 917, 1.02 billion and 1.04 billion. So pretty much it looked like the things have saturated for LRN or Stride or K12.com. But the one thing that did improve a little bit better was the profit generally increasing, but we have seen the hiccups in 2019. It was 37.21 million and it reduced to 24.51 million. Now the things get interesting in the last 4 quarters, and we know the reason has to do with the pandemic. If you look at the quarter one of 2020, it had 257 million, pretty much in proportional to what the figures were in the last 4 years. Just divide this number by 4 and you get this close to 250 million. And the things did not change much in second quarter of 2020, and we know that the pandemic had started in second quarter of 2020, so the things started picking up a little more. But the third quarter of 2020, people there was a lot of more traffic. Probably they realized, they pumped up their marketing campaign or sale thing, and we see a real big jump from the second quarter to third quarter. Possibly I don't have the last quarter, a year or old quarter, but it probably jumped significantly from the same period in the similar quarter a year ago. And the fourth quarter was even better, and we saw a significant increase in the profit, which if you multiply by 4 gets to 100 million mark range compared to 24 million for full year or 37 million for a quarter, a year. Now what it means that this learn has got a bigger name out to a more people, and therefore its stock deserves a boost. And that's what we saw in sometimes ago. If you look at this 52-week range, the stock price was 17.30 to 52.84, and currently it's staying at $29.60 as I make this video on March 30th. The key point that you need to notice is that it has a low market cap, and if you look at the sales to price ratio, it's very favorable, because at this run rate, 376 million dollar, let's keep it at $400 million for the sake of simplicity, then it's going to be close to $1.5 billion, which means its market capitalization at this run rate is even less than the sales figure, which I believe makes it one compelling point to buy this share at this price. But there is one caveat. That caveat is, we do not know how the things are going to turn out when the pandemic ends, which means that some of these numbers that we are seeing right here could actually go down as people flock to their schools instead of the online platform. Now there will be some residual effect because people now know more about their brand name, K12.com, Stride or LRN, and it should not go back at least to this 257. We should be seeing at the worst this figure somewhere between this figure and this figure. That means this figure is probably where it should be, and I would like to, my advice would be to add a little bit of position at this particular point, and if it goes down, maybe keep some more position. But at the same time, I do not see how this could be a very fast growing year to year for many years to come. It could be growing like that. Probably it won't, and it will stay stagnant. The stock price could be moving sideways around this price unless we see some significant change. With that said, another thing I wanted to point out is the next earnings would be 26 to 30, between 26 to 30th April, and that I am expecting is another very good earning, and also because it will be declaring the full year results, so which will hopefully show it in a very good light compared to the previous year, and that could mean the stock could be a little bit off volatile. With that said, I wanted to point out about moonshotgr.com. This because it's also related to an education and an ed tech company. It's a product based learning, which means that the students have a product in their hand. That product could be a hardware product, something like a home automation system. It could be an app, or it could be a website or something, or some business. And when they keep that in mind, and then to develop that product, they learn whatsoever is required, and that it comes into the stage 2 of their learning platform. In the stage 3, they do actual product development. In stage 2, they do learn, for example, if it's required that they need to learn the programming, they learn that in stage 2. And then they have a stage 1, which which explore all the kind of the options that they could be learning to develop different products. For example, there could be an AI product, there could be a hardware product, a home automation product, an app development, a game development, and all these kind of futuristic types of the things that you. So I will highly encourage you to take a look at the moonshotjunior.com, especially if you have a student in 10 to 17 year old. Thanks for taking a look.